Hello, everybody. This is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, September 23rd, 2019. We are in the first trading day of a new week, and we are also in the final trading hour of today. And as I mention each day, I believe that the prices, as close as you can get them to the close, are the most valid prices of the day. And the reason I say that is during the day, you have a lot of day traders, you have a lot of algorithms that move the prices around. There's a lot of noise. At the end of the day, the big boys come in, the market makers, the large financial institutions, they come in, move the prices to what, in my opinion, are the most valid prices of the day. So those, the majority of the time, those are the prices that I choose to make my buying and selling decisions from. So I hope everybody had a good weekend. And hey, Steve Burns here. Hey, buddy. Good to see you, Steve. Wow, silver. I know. I'm torn on buying that today at the level that it's at, but uh, ah, unbelievable. Unbelievable. Would have been nice to have that 520 cross on Friday, obviously, right? But that's sometimes how it goes. So thank you so much for coming, Steve. It's always an honor to have you here, my friend. And so, all right. So I guess everybody can hear me because Steve said hi. So that's great. So currently, the market is up. Dow Jones is up about 50 points. It's up 0.2%. NASDAQ's up 10 points, 0.13, and the S&P is up about 4 points. So not too crazy of a day, pretty dull. We did open up lower. We've reversed back higher, which is always positive. But I want to thank everybody for coming. I appreciate your spending your time with me and investing your time with me here on this live stream. I hope it is having a positive impact on your trading and how you view the market, and that you're getting some kind of return on your time investment. So thank you so much, as always, for coming. All right, so the plan for today, as usual, first of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them either to the upside or to the downside. Then we're going to spend a few minutes on trader psychology. As I mention each day, trading psychology, in my opinion, is the most important skill that you can develop. So, I think it's a good idea if you think about your discipline and following your plan, not as something that you have to do because you're supposed to do, but look at it as a skill. And the more that you follow the plan, the more that you follow the rules, the more that you get in a habit of that, you're going to develop that skill of following your plan. Following your plan is a skill. You don't really think about it that way, but it is. And the more you do it, the more of a habit you're going to create, the pathways in your brain. And in the long run, you're going to be much better off, I promise you, by following your plan, sticking to your rules, than just, shooting from the hip and deciding to go against your plan and do something that you're not supposed to do. You thought of this plan when you were calm, right, objective, and a lot of times during the day, if you make some impulsive decision just for some instant gratification, it's not going to be a calm, calculated decision. It's more likely going to be an impulsive decision. And impulses in trading really are killer. So we're going to do a few minutes on trading psychology. Then we're going to come back. We're going to go through my entire watch list, each stock one by one. We're going to take a look at the technical levels. We're going to look for support, resistance levels. And in my opinion, the best setup you can take is when you have a confluence or a combination of indicators lining up, whether those indicators are RSI or MACD, ATR channels, V1, V2 entries, moving averages. I look at all those indicators as groups of buyers, potential groups of buyers. So if you want to go long a stock, you want to be in the company of other buyers, and the more buyers, the better. And therefore, the more indicators that line up at the same time, the more buyers you have. right? So that's what we're going to do. We'll go through each stock one by one. We'll take a look and we'll see if we can get some kind of setup for today. And if we get a setup, then I will take a position as close as I can to the close of the market. And if there's no indicators, there's no setups, then I just won't buy anything, and that's fine. You don't have to buy something every day. I know you get in the habit of doing it, but it's important to remember you don't have to buy something every day. If it's not a good setup, why buy it, right? Remember, there's 3 valid positions: long, short, or in cash, right? So always remember that. And if you have something good that lines up, sure, take it, follow your plan. But if you find yourself out of habit just wanting to buy something because you want to buy something, it's not really there, probably let that one go, right? Probably let that one go. I like to be in cash or light. I really do. The older that I get, the more years that I do this, when I have light position, I'm like, feels good, right? Might as well not put your money at risk, your hard-earned money at risk, unless you really have something valid. So that's what we're going to do then after the market closes. If anybody has any questions whatsoever about anything I talked about today, you need clarification on something, please let me know. If you have some general trading questions, please let me know. Happy to answer them for you or give you my opinion on them. And then if you have any stocks that you would like me to take a look at, give you my humble opinion on your stock symbols, I will be happy to do that. And that is pretty much the plan for today. So anyway, if you could please hold tight, I'm going to run the U.S. legal disclaimer and I will be right back in about 40 seconds. Thanks a lot.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Hey, Brian512 is here. How you doing, Brian? Brian's our little stock trading and investor protege. He, I believe, turned 18 years old, so he's getting ready to set up an IRA. So proud of Brian, and thank you for coming. Hi, JT. How you doing? Good to see you, sir. Always nice to see you. Jesse, good to see you, sir. Thank you for coming. Hope you have a good weekend, and look forward to our call on Wednesday. If you have any questions today, Jesse, you please let me know. Anthony, what's going on? Hey, Greg, my friend. I hope all is well, and I'm looking forward to our call tonight. Hey, y'all. I am looking forward to it tonight as well. Tonight is probably, in my opinion, one of the most important lessons. We are going to spend a whole lot of time talking about exits. And if you guys know me for a while, you know I'm obsessed with exits and where you get out of positions. Getting in, yes, important, but I think it's very important where you get out and how you get out. So we're going to be going through that. Brian, yes, sir, I'm 18. Good for you. Welcome to adulthood. Shelton Johnson, good afternoon. Hi, Shelton. Nice to see you. Thank you. Steve Burns says an IRA at your age, listen up, Brian. An IRA at your age can change your life if you grow it tax-free and compound it for 20 years. Yes, that is totally correct, Brian. Listen to what Steve says. This is what I've been telling you as well. A huge advantage, huge advantage. Steve, I actually would like to get your thoughts for Brian on your thoughts between a regular IRA and a Roth IRA. So, all right. Well, listen, let's get to it, and we'll go through my current positions, and we'll talk about when I bought them, why I bought them, how I'm going to manage them moving forward. Still having issues with my trade manager. It's getting super old. Uh, I really hope they get this taken care of. But on some of these charts, you are not going to see today's move, unfortunately. But I have backup charts, so we'll take a look at that. But on the main charts here, I bought DDM back here on the 26th of August. I bought it because the previous day we closed under the 200 day. The day that I bought it, it closed back over. This is a completely mechanical approach to trading the DDM. This is a back-tested, quantified, long-term profitable approach to trading DDM, of staying out of DDM when it's under the 200 and staying in it while it is over. So I did buy it here at 45.75. As you know, I like to phase out as things go my way. We have had a really nice rally here. This was the majority of the rally. Ever since here, we have just kind of moved sidewards. I am out of about 70% of my position. Let's take a look at the working chart. Is up a bit today, which is good. Have not hit any profit targets yet today. Do like that we have this V1 here. Here is day one. Day two washes out day one, closes above day one's close. This isn't a new position for me, right? We bought this back here, but this, this is definitely at least some good price action that happened inside the value zone. First profit target is at 15.16 right now. It is at 49.94, so it's possible. I mean, if we rally into the end of the day, it's possible that we might hit one profit target and take a few more chips off the table. Okay, so DDM, IBB. I did buy IBB back here on the 16th of November. I bought it when the 5 EMA crossed over the 30 EMA. This is another profitable long-term back-tested approach to trading IBB, which is a NASDAQ biotechnology ETF. Did buy it here at 105.18. Right now it is at 104.78. So slightly down on the trade, although I did hit one profit target on Friday, up at profitable levels above where I bought it. So that's one of the reasons I really do like to phase out. I like to give the market some shares when they want to buy them. Pretty much moved sideways since I bought this. I did buy a 1/2 position because we were under the 200-day moving average. That's just a filter that I use. So going forward, I will continue to stay in this trade until either the 5 crosses back below the 30 for hopefully a small loss. This is how these moving average crossovers are constructed. If you're wrong, you're generally wrong fairly small, and if you're right, you get a really nice big uptrend. You have the ability to make outsized returns to the upside because you're open-ended to the upside and you cut it very short. You cut your losses very short if you're wrong. So currently down on the day. Total mechanical system, though. This is a robot trade. As long as the 5 stays above the 30, I will continue to stay in phase on the way up until I'm out of shares, or the 5 crosses back below the 30. That will be my stop. You can see here my profit targets for today we have not gotten close to any of these profit targets today. Okay, Johnson & Johnson. I did buy Johnson & Johnson. This is a discretionary trade, by the way. This is not a moving average crossover trade. I did buy Johnson & Johnson back here on the 18th of September. I bought it because we had this nice higher low V2. Here is day one. Here is day two. Day two washes out day one and closes above day one's close. In addition to that, it did close above the 50 RSI and it closed above this band of moving averages, and it also was a higher low. The reason I like higher low trades, everyone, is because if we go down, make a lower low like we did here, people bought here, they had a nice move up. Once it starts to kind of stall out, the people that bought here are going to sell here. They've had a nice profit. That's going to add some selling pressure, and that might drive it down, which it did. Then if when it starts going down, but then it's strong enough to go down and reverse back up, that's very strong because we tried to sell down here. The market did not like any of the prices back here and rallied back here. In addition to that, the people that bought here and sold in this down move, now all those sellers are gone. We don't have to worry about those sellers because they bought here, sold, sold, but then we got overtaken by buyers again, and this whole group that bought here sold here. Now we have an easier up move. So this is let's take a look at Johnson & Johnson on all right. So Johnson & Johnson is up today. It's up 30 cents. It's up about 1/4%. 132.57 is my first profit target today, and currently right now we're at 131.99. So who knows? I don't think we're probably going to hit one today, but we will see. But it's been a nice profitable trade so far. So going forward, again, this is a discretionary trade, so I have the ability to get out of this if I do not like the price action. I'm fine with the price action here. We're above the first ATR channel. If we were at this point, if we were to close below the previous day's low, I would probably get out. If we went above and tested the 200-day and closed back below, that would also be kind of a red flag for me to get out. If it goes and closes above the 200, great, I'll keep it and I'll continue to phase up. If it closed above the 200, then closed back below, then I would get out. So, you know, that is how I manage these trades to the upside. When they start going up, if they reject key levels, I'll get out. If they go above and stay above those key levels, I'll continue to stay in and search for higher levels above me. But if I get taken out by that key level in coming days, then I'll also get out. But so far, this has been a good trade. Glad to see it's up today. And be interesting to see how we react. Here's the one ATR channel. These one ATR channel, two ATR channel, third ATR channel, you know, these all act as some kind of support. The one ATR channel is one deviation away from the mean, so it should have some resistance there. If it can make it there, might go to the second. But once we get up to 2 standard deviations away from the mean, you know, then you're starting to pull the rubber band a little tight. And then kind of my ultimate profit target up here would be the third ATR channel. 90% of stocks stay above the third ATR channel and below, above the negative third ATR channel and below the positive third ATR channel. So this is kind of the area, generally, not all the time, that these stocks will stay in. So once we start getting up here, you know, I get a little trigger happy because most of the time, not all the time, but a lot of the time, the majority of the time you get up to this level, that's about all they have. The rubber band's pulled pretty tight. So it's up 40 cents now. So who knows? Maybe we'll get there. All right, Qs. So I did buy the Qs. This is a working chart. I did buy the Qs back here on the 4th of September. I bought it when we had, this is another mechanical crossover trade. We had the 5 EMA cross back over the 20 EMA. That was my buy signal. It happened within the value zone, so I did take full position on this. You can see we had a nice move ever since I bought it. Have phased out here at higher levels. The last week, it's been a lot of sideways, ups and downs and ups and downs. So nothing really going on. There's some consolidation here. The way I'm going to manage this trade to the upside, as always, if it continues to go my way, I will scale out of when I hit my predefined profit targets to the upside until I'm out of shares, or conversely, if the 5 EMA crosses back below the 20 EMA, that will be my signal to get out of the trade. And again, with these crossover trades, they're designed so that your losses are generally small, but your wins can be outsized and can be very large to the upside if you hit a big trend. And that's how you make money, right? It's always important in trading, everybody, that you know, you have, these are the options. You can have a large win, always good. You can have small wins, that's totally fine. You can have scratch trades, or in other words, basically break-even trades. You can have small losses, that is allowed. in the formula, but you just cannot have large losses. That's what will mess up your entire profit and loss, and that's what you want to stay away from. So, when I look at trading, the first thing I always look at is risk and trying to keep my losses as small as possible, because I know if I keep my losses as small as possible, the rest of it will take care of itself to the upside, if and only if I keep the losses to a minimum. So Qs are up a bit today, which is good. Still have not hit any profit targets today. All right, the famous SPY trade. So I know you guys hear this every day, but we have new viewers, so I want to make sure that they understand what the SPY trade is. This is from Liz Ann Saunders at Bespoke Invest on Twitter. This is a long-term back-tested approach to trading SPY. It does not take into account any technicals whatsoever. With this approach, you have two options. Option number one is that you can buy the SPY at the open and sell it at the close every day, right? This back test is from 93. Buy at the open, sell at the close. Buy at the open, sell in the close. If you would have used this approach using the SPY, you would have actually had a negative 13.9% return. But if you did the opposite, which is what I do, and you buy the SPY at the close each day and then sell it the next morning, so every day, buy at the close, sell in the morning, buy at the close, sell in the morning, you'd have actually returned 634.2% compared to doing the opposite with the negative 13.9%. So past performance, no guarantee of future results. That's exactly true. We don't know how it's going to act in the future, but we base it upon how it acted in the past. And in the past, it has worked out really well. You can see the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. And you can see over time, this does have a really good edge, and it plays out. With any trading system, you're going to have ups and downs. That's why I like this chart so much. This shows you what even a great system looks like. There's ups and downs. Just because you use an approach and it may have a temporary down move doesn't mean it's a bad system. It just means that you have to, that the edge will play itself over time. Which also important, very important, is that you position size correctly so that you can continue to participate in that particular type of trade or setup and not get knocked out if you have some short-term drawdown. I mean, if I would have started here, loaded up the boat, this was down for 2 years, right? I would have said, this is the worst system. I'm not doing this anymore. But if I would have done that, I would not have been able to participate in the long-term approach of using this. So I use a 10% position size each day. If it's up nicely, it's good. It's makes a difference. But if it's down, it's not going to destabilize me. It's going to keep letting me take this approach because I did not damage my trading account and the finances in my trading account with huge losses. So, whether this is the overnight SPY trade or whether it's any other type of approach to trading, everybody, please take the long view, position size correctly. I know it's not super exciting, but, in the long run, that's where you make your money. And we always talk about long-term investing. People understand that works, but look at trading as long-term trading and staying in the game. All right. So with that being said, I'm not showing the bar here, but I did buy the SPY on Friday at 298.28. It opened up down today, so this was an overnight loss. I bought at 298.28, sold at 297.57. So was a small loss to the downside, but that's how it goes. I remember in the month of May, this approach probably lost 80% of the days, but I've been using this since since February 26th, and it has been very, very profitable. But it's been rocky road in the middle, but in the long run, it has worked out really nice for me. So I will be buying the SPY again today at the end of the day. All right, SSO. SSO is double leverage S&P 500. This is another back-tested approach to trading. Let's see. Another quantified back-tested approach to trading the S&P 500. Wait, let me take a look real quick. I actually deleted that 9.6. Okay. Yeah. So I did buy the DDM, there we go. I did buy the SSO, the double leverage SPY, when the 10 EMA did cross over the 50 EMA. It has moved up since I've bought it. As it's moved up, I have phased and reduced my position size on the upside. Going forward, I will continue to stay in this trade until either the 10 EMA crosses under the 50 EMA. That will be my stop, or if it continues another leg up, I will phase to the upside until I am out of the position. Oops. All right. And no profit targets today on SSO. Let's take a look. And again, everybody, I apologize for these charts. There's really nothing I can do. I'm just trying to make do with the best, or with what I have here. But it is up today, which is positive. You can see this is the actual chart here, the working chart here. So first profit target today is at 130.96. Right now it's at 130.40. So it's possible that we could get there. It's possible that we could get there today if we have a strong close. All right, let's see how we're doing. All right, well, the Dow's up 67, so that's good. All right, so oh, great. Steve's giving some information on IRAs. That's wonderful. Thank you, Steve. Really appreciate that. Hey, Murat, how you doing? Hi, all. Still at work. We'll listen on my way home. Okay, that sounds good. Hey, Mount Doji, what's happening? Good to see you, my friend. Marco, what's going on, Marco? Good to see you. Thank you so much for coming by. I appreciate it. Okay. Let's see. Here we go. All right, everybody. So, this is the part of the show where I like to do a few minutes on trader psychology. I like to look at Twitter, look for some good posts, some good trading words of wisdom. This is from our friend Thomas Payne at Trader T Payne. Thomas has some of the best postings each day on trader psychology. I'm always really impressed with what he writes. If you haven't subscribed to him, I would really recommend it. Read all of his posts. Read them every day, read them 5 times, and internalize them, because again, this is always about trading psychology. And again, most important skill, right? So remember that, think about that. It's the most important skill in trading. So, let's get a handle on it and develop that skill. But Thomas says, when you make impulsive trades, you are often satisfying your short-term desire at the expense of your long-term goals. Example, a FOMO trader, fear of missing out, a FOMO trader satisfies your a FOMO trade satisfies your short-term desires to eliminate the fear of missing out, but it hinders your long-term goals of becoming a better trader, right? And impulsive trades are killers, everybody. Your planned out, calm trades using a correct setup, those in the long run are the trades that are going to be most likely to be profitable for you. If you have a fear of missing out and you take an impulsive trade, it's not part of your plan, and because they generally don't work out, right, it hinders your long-term goal of what your original goal was. So just like if you're on a diet, right? You're on a diet, your long-term goal is to lose weight, but you're like, hey, that Snicker bar is looking pretty sweet right now. You're satisfying your craving for that Snicker bar, but it is it's at the expense of your long-term goals, and it's no different with trading. So if I could program a person to be the perfect trader, they just would not have any impulsive trades. And for those of you starting out, this is like the best time when you don't have those pathways in your head. Some of the best times to start out as a trader is when you have no experience with trading, you don't have any bad habits, and you can start and build right from the beginning perfect habits. And so those habits and how you trade, that will feel totally right to you, right? It's just like golfing. If you've golfed for 20 years and you're kind of a hack, and then you decide you're going to go to a golf pro, he has to break you down. He has to break you all these bad habits. Very difficult. But if you have somebody who's never picked up a golf club in their life, and they go to a golf pro, and the golf pro says, all right, I'm going to teach you the correct way from the very beginning, they have a huge advantage over the guy that's golfed 20 years and that's a hack, right? So when you make impulsive trades, you are often satisfying your short-term desire at the expense of your long-term goals. Example, a FOMO trade satisfies your short-term desire to eliminate the fear of missing out, but it hinders your long-term goal of becoming a better trader. So, let's try not to make those impulsive trades, and let's try to stick with the plan. So thank you so much, Thomas. Another great post as always. All right. All right. Well, let's go down through the charts here, see if there's something that's interesting. This is Apple. Apple's up $1.94 today. Did poke its head back down into the value zone. No particular setup for me here today. I would need a nice V1 or V2 to get interested in Apple. Adobe is just moving sidewards, no V1s, V2s. I would be looking on Adobe for a close under the 200, back over the 200, or in addition, a close under the 30, back over the 30 RSI. Ideally, that happening on the same day. Under 30, under the 200, back over 30, back over the 200. That is where the sweet spot on this trade would be. So I would be looking for somewhere down in this area here. Oh boy. All right. So here's AGQ. So Friday we were looking for the 520 cross, and it was just a few pennies off. We didn't take the trade. Dang it. Unfortunately, we didn't get it. Now today we did have the cross. We did have the 5 EMA cross over the 20 EMA. I'm a little concerned about where we are located here at this moment. We're about 1.75 ATRs up here. We have this huge gap. What are we at? We're at a 59.97 RSI. This is a completely valid trade here, and I think more than likely this is going to continue to go up. But it's tough for me to buy this big gap, and it's tough for me to buy this high over the value zone. So I am actually going to let this trade go. Gold looks a little tamer, so most likely I will be getting into gold, but I am going to let this one go. But this is a valid trade, and it very well could just go higher and higher. I just think it's a little high for me at this area, but we shall see. If it closes back below a little lower, I might consider it, but I don't think it's going to. So at this level here, I am going to go ahead and just pass on AGQ. Now, if we come down for a couple days, come back in the value zone, and we're still under the 520 cross, I may enter there. So this is a coin flip kind of trade. It is valid. I just don't like where it is right here. So I think I'm going to pass. All right, AMD has a nice V2 today. Here is day one. Here is day two. Day two washes out day one. Looks like day three is closing above day one. Currently, it's at a 49.97. What I don't like is that we have this lower high. Here's a high. Here's a lower high. Ideally, when we have lower highs, I like it to wash out that previous low before I get involved. MACD did go positive today, so that's pretty good. I'm going to watch this one at the end. Currently, we're at a 49.94 RSI. If it closes under 50, I certainly will not buy it. If it closes over 50, I would consider it. But it's been, it's been quite range bound. I mean, it's just up and down and up and down and up and down and up and down. Eventually, this is probably going to start breaking. And who knows, this might be the day. I mean, it is a nice V2, but again, we have a higher low here, so ideally I'd like it to wash out this. So I'll watch AMD at the end of the day. So here's Amazon. This is a tough one because we did go under the 200 earlier today. We did peg the 250-day moving average. We have, it looks like at the moment, we've closed back over the -1 ATR channel and the 200, and it's a higher low. This would be a legitimate entry here. It would be a legitimate entry here for sure. I'm concerned about this huge bar the day before with the huge volume. I'm also concerned that we're down today, down 7.42 on an up day. So the relative strength of Amazon's not so hot tamale either. Does this offer you a good risk to reward ratio? Yeah, it does, although it's a 42.77 RSI. So, once we get up to about a 50 RSI right up in here, you're probably going to have some theoretical resistance, and that probably is going to happen right about halfway of this bar. So I think I'm going to let Amazon go as well. I mean, I do like that the low down here today was right where this other previous low was. We actually bought here. We had a nice trade up to here. But I think I'm going to let this one go unless we can get closer to the 200, have that RSI come down a little bit and give me a little better risk to reward. So as is, we'll watch it at the end of the day, but again, I don't like it. It's a 42 RSI. We're probably going to bump up to some 50 with that huge bar down here. And ideally, I really like it to close under the 200, then back over the 200. So I'll watch that at the end of the day. Boeing is we had this nice move up. We are now into the value zone. In order for me to get involved with the V1 or a V2 entry back in the value zone, first of all, I needed to make a higher high. It did that. I needed to come back into the value zone. It did that. I needed to move sideways for a few days. Has not done that yet. And then I need a V1 or a V2 entry. So nothing yet on Boeing for me. Ooh, Alibaba had a tough day today. Tough day. Again, we made a higher high. We're in the value zone. I need this to move sideways for a couple days, kind of calm down, have the bars narrow, move sideways, attempt to rally to the downside, and then a V1 or a V2 back up for me to get interested. So nothing on Alibaba. Caterpillar. So, Caterpillar did make a higher high. It has come back into the value zone. It did trigger a V1 today. Here's day one. Here is day two. Day two washes out day one. Looks like we're going to close above day one's close. But I have not seen any sidewards movement here. Again, I need it to go up, come into the value zone, move sideways, then have a V1 or a V2. We haven't moved sideways. We've just come down. So nothing on Caterpillar. DBC has come down, moved sideways, but it's not in the value zone. So nothing on that. DDM we have. This is on the crossover system. Here is a V1, but no sideways movement. I mean, we made a lower high. We did wash out that low, which is valid, but I really need some more sidewards movement. Disney. Currently, we're at a 39 RSI. For me to get interested in Disney here, I'd either need, to the upside, I need a 1050 cross, or ideally close under 30, back over 30, or close under the 200, back over 200. This would be the sweet spot to buy. You might look at this and go, well, that's a long ways away. And that's right. Let's just be patient. Let's let the trade come to us. Let's not try to force the trade. Let's identify a good location, a good sweet spot, and then sit on our hands and not do anything until it gets there. So Etsy did run into some resistance. It's a 200-day moving average. Even if it broke above the 200, I would not buy it. It's too close to the third ATR channel, so nothing on Etsy for me. Ford, under the 200-day, nothing there. Facebook having a pretty strong down day today. We did make a higher high. We're back in the value zone. I'd like to see this move sideways for a couple days, then have a V1 or a V2. So nothing quite there on Facebook. Okay, so 5 is interesting because we did make a higher high. We did come into the value zone. We have moved sidewards. Here's a V2. Here is day 1. Day 2 washes out day 1. If today we close above day 1's close, day 1's close is 128.48. If we close above 128.48 today, I will be most likely buying this. And again, just to go back over, we made a higher high. We came into the value zone. We have had some sidewards movement. We attempted to go down. We reversed back up. What do we have right now? 56.61 RSI. So we're above the 50 RSI. We're above the moving averages. So that all looks pretty good. Oh, gosh darn it. Give me 20 seconds, everybody. Got to move the dog around. She knows what time it is. I apologize. I'll be right back. Okay, sorry. I think her trigger word is Apple. As soon as I start going down through the charts, she starts making her move. So anyway, this looks pretty good. Higher high, downwards movement, slow and steady, stabilized, move sideways. Here's a V2, but only if it closes above day 1's close. And day 1's close 128.48. So I am looking at 5 today. Gold. So gold had the 520 EMA cross. That is a valid signal. We almost had it on Friday. We did not get it on Friday, but today it looks like we're going to get it. This is a bit tamer. It's still in the value zone, so this will be a mechanical trade, trading the 5 EMA, crossing over the 20 EMA. I will be buying a full position in gold today, and this will be a completely mechanical crossover system. I already have the order in, so this will just buy at the end of the day. Google, nothing on Google. Goldman Sachs, we made this high, we came down, we made a lower high, we did wash out the lower high. This might be possible here, close 213.74. So Goldman Sachs, 213.74. So it's not quite there. Let me quickly run the numbers on this. All right. So this would be decent if it closes above 213.74. So I will watch that at the end of the day as well. Intel in the value zone. Little V1 today, but it's up against a large bar. No sideways movement, so nothing on Intel. IWM had the move up, coming back into the value zone, but nothing there yet. I need it to move sideways a couple days in the value zone. Nothing there. IBB, we have IBB on the 530 cross, so that is a mechanical trade. Just quickly, that is this one right here with the 530 EMA crossover. So that's mechanical. We are already in that trade. Johnson & Johnson, of course, we had that. We bought that here on this higher low V1. So this is up today, which is good. Coca-Cola, nothing there. Lockheed Martin, again, looking for a V1, V2. We made a higher high. We're coming back into the value zone, which is good. We just need a couple days of sideways movement and then a V1 or a V2 to trigger us back into the trade. So nothing there. MasterCard, sideways movement is a V1 today, but it's up against the day one's bar is larger than 1 ATR, so I can't get involved in that. Philip, excuse me, MO, what are we at? We're now at a 3126 RSI. We went from under 30 back over 30. I don't like how it's reacted from the top here. We've come back down here. I think I'm just going to let that one go. Merck, nothing on Merck. Microsoft made a higher high back in the value zone. Again, needs some sidewards movement, V1, V2. Netflix, even more down today. You know, I would consider Netflix if it closed back above the 30. Currently, right now, it's at a 2773 RSI. It is getting close to the third ATR channel. So, you know, this may be somewhat of a temporary low, but I cannot buy this until we close back above the 30 RSI. Nike is just moving sidewards in the value zone, but nothing there. Philip Morris, V1, here's day one, here is day two. Day two did wash out day one. Looks like we might close back in the value zone. It wasn't a great washout, but we are working on a double bottom with a bullish MACD divergence. You know, here's the low. I'd like it if we could come down and test this low, but right now there is a lot of there is a divergence starting to form here, but nothing yet on Philip Morris. PayPal. You know, if we could go under the 200, back over the 200, that would be a good risk to reward. The Qs we already have on the 520 crossover. So it looks like the market has, or at least the Qs have gone negative on the day. Interesting. Okay. Snaps had a big move up, nothing there. SPY, we did buy the SPY. We had a small overnight loss on the overnight SPY trade. We'll be buying that again at the end of the day. Square we got out of. We did buy it here on this V2. It did move up for us a couple days, and then finally we had to get out here, but it is down more today, down 1.17%. So glad we got out of that one. SSO we have on the 1050 EMA cross, so that's mechanical. Bonds have been moving up, although we are working on a V1 to the downside. Here's day one. Day two washes out day one. If today we close below day one's close, that would be a valid V1 to the downside, but no trade there. Tesla, Starting to poke its head back into the value zone. Need this to move sideways. Look for a V1, V2. Twitter up slightly today in the value zone, nicely moving sideways. I'd really like to have a huge washout of a bar and reversal. That would be a good place to buy Twitter, especially now that it's consolidating, but nothing there. UNG, big move up, back into the value zone. Again, need this to move sideways for a couple more days. Have a spike down, reversal back up, but nothing today. UNH, nothing on UNH. Oil, nothing on oil. The dollar, nothing there. VIX had that big move up on Friday, had that V2. Here's day one. Day two did wash out. Day one, day two did close above day one's close. That is a valid V2. Not going to buy that there. Verizon, been in the uptrend. Pretty mellow bars, but nothing there. Walmart, nothing on Walmart. Energy, nothing on energy. XLF, had this big move up. Now we're coming back down into the value zone, as with a lot of other stocks that I've been talking about today. We had this big move up. We got a little overbought coming into the value zone. I needed to move sideways and have a V1 or a V2 to the upside. This was a really great trade we had back here on XLF with the close under the 200, back over the 200. And we rode this all the way up to here. Phased out, ran out of shares there. Real estate, right in the middle of the value zone, but no triggers. Nothing on XLU. How we doing on time? Nothing on. All right, so let us go through our possibilities today. So first possibility is AGQ. I think I'm going to let this one go. I just don't like how high it is. We're getting, close up here to the second ATR channel. So my plan on AGQ is, this is very strong. There's a lot of volume. I'm going to see whether or not I can pick up maybe a little cheaper, but I am going to be buying gold. So, they should go up together. But I don't want to take both positions because then I'm double correlated. So I think I'm just going to let AGQ go, and I'm going to concentrate on gold. AMD, this is a nice V2, but again, we have a lower high. I'm going to wait until we can wash out this low and then get another V1 or V2, but not bad. I mean, it is a completely valid V2. MACD is positive, but on the downside, it is not above 50 RSI, and it looks like it's already tested the 50 RSI, so I'm going to let AMD go as well. Amazon, this big, huge bar here on this huge volume concerns me. We did gap lower. We did attempt to rally. On Amazon, I'm just going to play it safe here and wait for a close under the 200, back over the 200, and ideally get a better RSI, because right now the RSI is at 42.60. So we only have 8 points until we get up to a 50 RSI, and we should have some theoretical resistance there. So I'm going to let Amazon go as well. Gold, I am going to buy gold. We have the valid 520 EMA cross. It's still in the value zone, so it's not quite as extended as silver. So I will be buying this at the end of the day. This will be a completely mechanical approach. 5 EMA staying in until we scale out, till we're out of shares, or the 5 closing back under the 20. And then 5. So currently we are at a 5603 RSI. That is good. I liked it higher when it was better. Let's see. 128.48. We are now under 128.48. Here was the day 1, day 2, day 3. Day 2 washed out. Day 1, day 3 needs to close above day 1's close. All right, we have 5 minutes left. 128.48. Let's quickly look at this on a weekly chart and see what the weekly looks like. What's happening here? All right. Well, I will go over here and do that then. Yeah, the weekly looks decent in the value zone, not too high. So, yeah, not too bad. All right. So 128.48. 128.48 is the line in the sand. So everything is pretty much on autopilot at the moment. We are going to buy gold. That's already in the system because of the 520 EMA crossover. We are going to buy SPY with the overnight trade. IBB, we still have the 5 over the 30, so that is fine. All right. So really the only thing I have to take a look at here for today is going to be 5. 128.48 right now, it is under. So let me get that queued up just in case. Okay. Yeah, market sold off quite a bit there. So now the NASDAQ and the S&P are negative. All right, so we have about a minute. I'm waiting to see whether or not 5 will close above 2 days ago's close. 128.48 currently as is, it is not. So unless this rally's huge here, really our only trade today will be the S&P. Overnight trader will be my trade. All right, 15 seconds, so I don't think we're going to get 5. So it looks like our only trades today is going to be gold and the overnight SPY trade.
Order cancelled.
All right.
Order filled.
So let's take a look. So we bought gold at 143.75.
Order
And we
cancelled.
bought the SPY at 298.21. So let's go over to our charts. All right. So our new entry today on gold is 143.75. It's up here because it's not showing today's bar. Let's see. All right, yeah. So we got it right here. We got it right here at 143.75, right at the close. Exactly the same price. So roughly right there. And then on our S&P trade, new S&P trade, $298.21, and we'll sell that first thing tomorrow morning. Okay, all right. So I'm gonna go over your questions and your comments. Before I do, just want to put in a quick plug. Let everybody know I do offer private one-on-one coaching, mentoring, and teaching lessons in the evening time via Skype. So, if you're interested, please reach out to me. I do have a 10-hour course. It is 5 2-hour one-on-one live Skype sessions with me. In case you'd like to, understand what that looks like, generally I have a 30-40 minute initial Skype
Order
call.
canceled.
It's a free Skype call. I just want to get to know you better. I want to understand how you got into trading, what your methodologies are, what your challenges have been, and what your goals are. And importantly, probably most importantly, what kind of plan do you have? Because I talk to a lot of people, they have, they know some entries, but they really don't have a complete plan. So based upon what you tell me during our Skype call, I'll put together a customized lesson plan for you, for your situation, how much screen time you have, what your financial situation is. But, I've had really great success with my clients. I've turned some really bad losing traders into some really good profitable traders, and so I think it's a good investment. I think it's affordable for what you get, and so if you're interested, please reach out to me on Skype, or my email's in the description here, and we can set up the free phone call or the free Skype call just to get to know each other a little bit better, just to see if it's a fit, right? And then based upon what you tell me for that conversation, I will create a customized lesson plan for you. So if you've been thinking about it, reach out to me. We'll have that call and we'll see if it's a good fit for both of us. And then secondly, if you like this channel and if you haven't subscribed, I would appreciate it if you would. And then at the very least, if you could hit the thumbs up button, if you find it helpful, only if you find it helpful, if you could hit the thumbs up button, I would really appreciate it. It helps Google promote it out to more people. I get a lot of people that send me emails saying, thank you, I'm learning a lot on this channel. It really is improving my trading. And that's why I started this channel. I really wanted to share with everyone what I've learned over the last 24 years being, a professional trader and a money manager. And so I really hope it is helping. And if it is helping you in some way, I would appreciate it if you would share it. So, okay, that's my plug. Thank you for bearing with me. But let's go through. I'm interested to see what Steve had to say. Steve says, a Roth IRA may actually be better for him as he is currently in a lower tax bracket. I prefer regular IRAs for high income earners so they can defer taxes until after retirement, when they should be in a lower tax bracket, saving income tax and growing tax free with no capital gains. It is all wanting to pay income taxes when you are in the lowest tax bracket. Okay, and Brian says, oh, so where would you recommend me to open any of those, Steve? Should I open them in the same place or separate places? And because Greg recommended Charles Schwab. Yeah, I did. I think Schwab's good. I mean, I don't have any ties to Schwab whatsoever, but you know, they're well known and they have good customer service and pretty low commissions for something like an IRA. JT says, I have both TD Ameritrade and Schwab. I like Schwab better, not only the commissions, but the charts, tools, and info they provide are much better. Steve says, Schwab and Merrill Lynch, both great. Yeah, you know, you can't go wrong with a couple of those biggies. Mount Doji says, we don't like those lower highs. Yeah, that's the thing, you know. We have, like on AMD, we have those lower highs. And so, you know, here's a high, we come down, we attempt to rally, now we come back down. Now we're going to have resistance at that higher low. And we have a lot of stops back down in here. I'd like to see it wash those out and kind of reset moving back up. So I'm glad, Mount Doji, you're catching on to this lower high situation because it's important. Anthony says, let's go, people. Smash those likes. 30 people watching with 8 likes. Thanks, Anthony. Appreciate it, buddy. I think he has some good advice as far as hitting that like button. All right. So where did we end up? Only 15 points up on the Dow. NASDAQ and the S&P were down. So, you know, it's been pretty tough sledding lately. You know, we've had a lot of reversals. We've been up higher. We've sold off. We've been up higher. We've sold off. You know, not a lot going on right now. But like I said earlier in the podcast, this is what happens in trading. You know, you get sidewards movement, and I know you want to go in there and you want to make something happen, but when something's not happening, don't try to make something happen in the market. In other parts of life, sure, but right now, you know, it's kind of just sloggy and heavy, and it's okay to be on the sidelines, have small positions, not take a lot of positions. It's totally okay, right? It's better to be in cash than in some subpar position. Okay. Did anybody take any trades today? Did anybody do anything today? And how's everybody doing trading? Anybody have a good trade? Not so much on my end. Nothing too exciting whatsoever. Take a look here. All right. So we bought gold today and we bought the SPY. That was about it. So not too much action, which is fine. Steve went long silver. Oh, so we did go long silver. So Steve went long silver. He went long gold, UGL gold. You did buy Amazon. Okay, interesting. And let's see. And Etsy. So Etsy, Steve went long over the 200-day on Etsy. All right, well, good. That gives him a good risk to reward ratio. If he's wrong small. And if we have another leg up, he's right. You know, he has a potential to the upside. And then what else did you buy? You bought Amazon. Let's take a look. Oh, I do have Amazon in this chart. All right. So Steve did buy Amazon over the 200 with the close over the 200. Yeah, I was kind of struggling with this one, but feeling a little tentative today. So I'm going to, on my end, I'm just going to see if we can get a close over, under, back over. But you know, that's the thing. You can take two different traders. You have two different mindsets. You have two different approaches, or two different reads on the situation. Who knows? But I hope those go up, Steve. All right. Well, if any of you have any other questions, please let me know. Otherwise, I'm going to get out of here and I'm going to go for a hike. Have a lesson tonight with Anthony. Looking forward to that. So we'll get deep into profit targets, my favorite subject. Boy, what a day on silver. My goodness. My goodness. 8.37%. So my plan on silver here is, just because it was so high, I'm going to see if we can get a little bit of a pullback, get a little better entry, but who knows. But if it continues to roll up, then gold will probably roll up as well. So that's the approach. That's my approach today. All right. Well, listen, if nobody has any other questions, I'm going to get out of here, but I really appreciate you coming by today. I really appreciate you spending your time, investing your time. I hope this channel is helping. If you have any questions that you weren't able to answer today, or you didn't think of today, please feel free. You can send me an email. You can send me a message on Twitter, and I'll do my very best to get in there and answer that. All right. So thank you so much for coming. I hope you have a good rest of your day. Go out, do something nice for somebody today. Hold the door open, give them a wave, give them a smile, say, hey, how's it going? Right. We need more of that in this day and age. All right. Well, Steve Burns, thank you, my friend. Always an honor to have you here. Really appreciate it. I'm always excited when you're here. Anthony, good seeing you, my friend, and I will speak to you tonight. Mount Doji, good talking to you. Good seeing you. And JT, thank you for your feedback with TD Ameritrade and Schwab. Marco, good to see you, my friend. Thank you for coming back. I appreciate it. Brian, hope that helped on Steve's input on IRAs, and it's really great to see you here, and what you're doing at such a young age is really commendable. So proud of you. Shelton Johnson, thank you for coming. Good seeing you. If you have any questions, please let me know. Jesse, thank you for coming. Hope you're finding this helpful. I look forward to speaking to you on Wednesday. And I think that is it. Is that it? I think that's it. Oh, Wayne K is here. Hey, buddy, how you doing? Wayne says, how you use ATR next time. Okay. Wayne, I have in the description of this video here, I have links to 4 lessons, and one of those is profit taking, and that entire video on profit taking talks about ATR channels in detail. But quickly, one ATR channel means one standard deviation away from the mean. And the way that I really use ATR channels is, from here to here is one ATR. From here to here is one ATR. From here to the middle of the channel is one ATR. Then we have the ATR channels down here. From here to here, from here to here. These are all equidistance. Now, these are standard deviations away from the mean. So here's one standard deviation from the mean, here's 2, here's 3, here's a negative standard deviation, here's negative standard deviation, here's a -2 standard deviation, here's a -3 standard deviation. And I use these in a variety of methods. I think I've said before that most price action stays below the third ATR channel and above the -3rd ATR channel. So I use ATR channels as support and resistance levels, but I also look at them as how large is the current bar, right? If we go back here, From here to here is 1 ATR. From here to here is 1 ATR. Look at these bars. These bars are larger than 1 ATR. So what that means is on those particular days, those bars were larger than 1 ATR, or to say it another way, those bars were larger than noise. So if you get a bar that's bigger than the average noise, the ATR means average true range. So when you get a bar that is larger than the normal range, then you know something's happening either to the upside or the downside. That's why when I take V1 or V2 entries, I don't like to take them against bars that have larger than 1 ATR moves, because that's showing that in order to get larger than noise, in order to get larger than the average day, you have to have a lot of selling. So I use them that way as well. But I find ATR channels for measuring the lengths of each day's bar, I find that helpful. And then I also, like I said, use them for support and resistance levels. Something starts getting up here to the third ATR channel, that's 3 standard deviations away from the mean. That means you're pulling the rubber band pretty tight, right, to the upside. And conversely, to the downside, if we go down, we get to the third ATR channel, it's pulling the price pretty tight to the downside as well. And so, I like to look for entries down here. I like to exit when we get it to the upper band. And then the 1 ATR channel, it takes an extraordinary amount of buying or selling pressure to get outside of the 1 and the -1 ATR channel. You can see on AGQ, a lot of selling came in today. It's very positive. We were able to break above the 1 ATR channel. So I use them in all different ways. So I hope that helps a little bit. If we're going through here and there's anything when I talk about an ATR channel and you're not quite sure what I'm talking about, just say something, put it in the chat, and I'll try to clarify, when we're talking about something specific. Toby Petty. Hey, nice to see you. I don't think I've seen you before, but appreciate you coming by today, Toby. So did that help at all, Wayne? Is there anything more specific that you for your question? But again, Wayne, in the description of this video, there's 4 links to 4 different lessons. The lesson that talks about scaling out, that I talk a lot about ATRs in there. Jesse says, thanks, GG. You are welcome, my friend. Wayne says, okay, sir, I use it to control my risk. Yeah, you can use it for a lot of things. To measure how large a bar is, you can use them as channels. And, you can also use them as stops underneath you. If you lose an ATR channel to the underneath you, that's another way to use them. But I find them invaluable, really. I don't think I would want to trade without ATR channels. All right. Okay, everybody. Well, that's going to be it. I hope to see you guys tomorrow and the last hour of the market. And so hope you have a good rest of your day. And if you have any other questions I didn't answer today, feel free to email them or send them to me on Twitter. All right. So thanks, everybody. We'll talk to you later. Bye-bye now.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice. and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.